Hello, everyone, and welcome in to CrushTheStreet.com. I'm Kenneth Amaduri. I'm really excited today. I'm going to be speaking to a cryptocurrency trailblazer. I've been meeting a ton of really smart people in the crypto space, and it's no wonder why. Obviously, money attracts talent, and I was introduced and I met Jonathan Kaplan a few weeks ago at a Bitcoin meetup in Austin, and I find out that he's in the process of starting a cryptocurrency hedge fund. And we're going to learn about that today, but he's got quite the story and he's super knowledgeable when it comes to cryptocurrencies. He's a local guy here, to me at least, here in Austin, Texas. And I'm looking forward to speaking with Jonathan today. Jonathan, thanks for coming on the line with me.
Thanks for having me, Kenneth. I'm really excited to be here. Always happy to have an excuse to talk crypto. And, you know, this is actually my first podcast. So thank you for that. I've done a radio show before, but first podcast. So I'm excited to be here.
Well, hey, it's a pleasure to have you on. And we got to tell the audience about this. When I first met you, you told me you made enough money in crypto as you were introduced to it to last you a lifetime. And I was blown away by that. I don't think I'll ever forget that. And if you would, by way of introduction, tell us about how you got introduced to cryptocurrency and how you got involved in the space and why you're so passionate about it.
Sure. I'd like to think it's a pretty interesting story. Originally, I'm from Atlanta, Georgia. Came to the University of Texas in 2008 for business school, got a degree in information systems, started working at DuPont, a chemical company, when I graduated doing corporate sales, and spent a few years there before realizing that the corporate life really wasn't for me. So I started looking for other jobs, and I ended up getting an email actually from the chapter advisor at the Sigma Chi fraternity at UT, where I had pledged as an undergrad. And he told me that since I had graduated, the chapter had actually grown to the point where the university was mandating that we have a live-in RA, a house dad, so to speak, to live here at the house full time and basically make sure that the guys don't burn the place down. And so I said, hell yeah, man, sign me up. That sounds like a blast. And my whole family was just mortified that I'd be quitting a six-figure sales job to move back into an 80-year-old falling apart fraternity house. But I've always been of the opinion that you should think of your life as the story that you're writing. And I certainly didn't want the story of my life to read. And then he worked at a chemical company for 60 years and died. And I didn't really know where my life would go after that. I didn't really have a plan, but I thought, okay, at 25, quitting his cushy sales job to move back into a fraternity house at least sounded like the start of a very interesting story. So I came back here in June of 2015. And while the chapter doesn't pay me a salary, they do provide room and board. And I'm not a very materialistic guy, and I had a pretty cushy savings from my few years at DuPont. So I had all the time in the world to myself, and so I just started digging into things that interested me. And I really liked being the house dad. I loved being a part of the chapter. It made me the man that I am, and the ability to give back and mentor these young men and make sure they maximize their time here at UT. And well, anyway, it was something that I knew I wanted to do for a while, and in order to be here for them, I knew I had to make money from a computer somehow. I'd have to be here 24/7 up till 3 o'clock in the morning, 4 times a week, chaperoning mixers, putting out fires, metaphorically, sometimes literally. And so I did the first thing I do whenever I have a bunch of free time, and I went to the library and I just checked out a gigantic stack of books on just about anything that would interest me. And one of those books happened to be Digital Gold by Nathaniel Popper. And it's basically the story of how Bitcoin was created. And it reads like a thriller. I mean, it's a fascinating account of the history of this technology and all the major players that created it. And I have had a very fortunate life in that I happen to sort of be at the right place at the right time with the right knowledge, because I had just finished a book before that by my favorite economist, Nassim Taleb, called Anti-Fragile. And the concept of the book is that there are systems in life that, well, a lot of systems are fragile, where when you introduce chaos and volatility and uncertainty to these systems, it causes them to fail or break down or lose value. And you think of maybe a glass of fine china, a box of fine china. If you drop it, if you introduce chaos and uncertainty and volatility to that box of china, well, it breaks and the system loses value. And Taleb's concept of anti-fragility was such that if you had an anti-fragile box of china and you dropped it, the china would become stronger. And you can look at that concept play out in real life in very many different scenarios. The human body is a great example. Anyone who's had chickenpox as a child knows that once you've been exposed to the virus, your body learns how to create antibodies. And once you've had chickenpox, you never get it again. What doesn't kill you makes you stronger.
Sure.
Same thing with lifting weights, or if an earthquake decimates a bridge, ideally the city comes back and builds it even stronger than it was before. And after I'd read that book and I was reading Digital Gold, and I was reading about all these terrible things that had befallen Bitcoin, and at the time, in late 2015, we were just finishing off a rather brutal 2-year bear market, which saw the value of Bitcoin fall from an all-time high of about $1,100 down to a floor of about $200. And again, I was very fortunate to find it when I did, because when I discovered Bitcoin, it had, in about December of 2015, it had just turned around and gone from 200 to 400 in the span of a couple of weeks. And I wasn't the world's best trader, but I knew a trend reversal when I saw it. And to read about all these things that Bitcoin had survived, the China, air quote, banning Bitcoin, and the Mt. Gox implosion, and the Silk Road collapse, and to see that basically what didn't kill Bitcoin made it stronger, well, that to me was just a fascinating concept. And I liked the idea of investing in anti-fragile systems. I actually did the same thing with Donald Trump over 2016. I noticed that every time he would say something crazy or offensive, the mainstream media would go, oh, well, his poll numbers, they're surely going to collapse and his campaign is over with. But the opposite would happen. His numbers would go up and his rallies would get bigger. And so, long story short, in January of 2016, I basically took my life savings to that point, and I put half of it into about $400 Bitcoin, and I put the other half into Donald Trump to win the election. I found a prediction market online that lets you buy and sell shares in the outcomes of political events. And so, when I came back, I didn't know any of the undergrads, and I very quickly became the crazy house dad who was just ranting and raving about how Trump was undervalued and Bitcoin was going to go to the moon. And they didn't take me very seriously, but by the end of the year, Bitcoin had doubled to about $800, and I had rolled all of my winnings from the primaries into the nomination and then let it all ride on the general. And I think the day before the election, his odds were like 4.5 to 1 on Predicted, the website that I was using. And so then when he won the election, I took all of that money and I bought my mother a very nice Christmas present, and then I put the rest of the money into Bitcoin as well. And at that point, I'd been so distracted by the election that I'd been reading about Bitcoin, and I'd kept up with, the things that were going on, the halving and the Bitfinex hack and that stuff. But after I didn't have the distractions of all the political drama going on, I was really able to dig into Bitcoin and the emerging crypto economy that was starting to coalesce around it. And I realized, thanks to the help of Andreas Antonopoulos, a Bitcoin programmer, author, guru who has some amazing YouTube videos, I had this realization that, Bitcoin wasn't just digital gold. It wasn't just an additional asset in which you could invest. It was an entire financial system unto itself. It was an entirely new technology that could be adapted and changed. And just like you could take an internal combustion engine out of a car and put it in a motorcycle or an airplane or a double-decker bus and achieve an entirely different mode of transportation, so too could you take the technology behind Bitcoin, this blockchain ledger, and you could tweak its attributes. You could put it in a different vehicle and you could achieve more interesting or alternative goals. And so I started looking into this thing called Ethereum, and I bought some $10 Ethereum, and then something called Monero, and I bought some $12 Monero. And then, again, story of my life, just happened to be in the right place at the right time, because in March of this year, the whole space just started taking off. And for our listeners who maybe haven't been paying very close attention to anything but Bitcoin, Bitcoin's done very well this year, but just about everything else has eclipsed it in many parts, although lately Bitcoin has been stealing the spotlight yet again. But in January, the value of the entire space, the market cap, if you will, was about $10 billion, give or take. And I think today it's right around 170. So I don't like to talk much about price, because I think that the technologies and the things that this space is bringing about, it's very much a new internet. It's an internet of money. as opposed to the internet of data that we have right now. I think that's interesting. But like you said, big money brings in a lot of smart people, and there's just some amazing things going on in the space. And yeah, it's people ask me what this year has been like, and in between 2016 and this year, I tell people it's been like winning the lottery in slow motion.
Wow.
And so having lived through this and having become so obsessed with it, this is aside from managing things here at the fraternity and trying to help my boys be the best that they can be and make the most out of their time here. When I'm not doing that, or if I'm not asleep, I'm reading about crypto. I'm talking about crypto. I'm trading and investing and researching and attending meetups and meeting fine folks like yourself, going to conferences like the Texas Bitcoin conference here in Austin this weekend. And so
that's
I ended up meeting. Sorry, go ahead.
Jonathan, that is an incredible story, and congratulations, number one. I mean, this will be something you'll remember, and you'll tell this story for 10, 20, the rest of your life. I mean, you'll tell this to your grandkids and your great-grandkids. I mean, this is it's such a game changer, and really a game changer for the world in so many ways with what we're seeing with cryptocurrencies and their applications in the real world. All right, so we talked about how you got involved in cryptocurrency. I want to get your thoughts on where we're at right now with Bitcoin, and then I do want to get into some of the implications of blockchain and how it applies to where the world of finance is going. And obviously, you're starting a cryptocurrency hedge fund, so there's a lot of things I want to talk about that relates to that. But on Bitcoin news right now. We had the Bitcoin Cash hard fork in August. It's a seemingly non-event. Bitcoin got even stronger, and everyone got this crypto dividend. And here we had the Bitcoin Gold hard fork, and it seems like everyone was just waiting to dump it. Everyone wanted to pile into Bitcoin just so they can get this hard fork cryptocurrency, and it seems like they're just dumping it. And I'm wondering if that's just becoming the norm here, if Bitcoin's just getting stronger with these hard forks and people are just going to continue to disregard them as they come, or do you see something different, especially with what we got here in mid-November with SegWit 2X?
They're excellent questions, and it's a great example of just how quickly the space moves and all the fascinating things that are going on. And one of the things I like to tell people, especially because, like you said, I am starting a crypto asset hedge fund with a good friend and local Austinite, Frank Jew. We met on a cryptocurrency web forum back in March when we were trying to see if there was anyone we knew in person in the city who wanted to talk about this stuff. And we had been managing money for friends and family and had been doing well enough to where they just kept referring other friends and family to us. And we said, well, look, we could do a lot of good for a lot of people, and we know this market very well, and we want to help people make money while we make money. So that's where we are now. But as far as the hard fork goes, like I tell my investors, I don't like to impose my will on the market. I'm not one to tell people, well, I know what's going to happen, or this is how things should be. My strategy is simply to kind of watch what happens and try to figure out what's going on. And a lot of people like to be consistent in their opinions or to have a very set idea of something. And I mean, I change my ideas and opinions all the time. So at this point, I'm sort of in watch and see mode, because when the Bitcoin Cash hard fork was coming up in August and the market really started to turn down, people were very, very bearish. And as we saw, like I was saying earlier, what doesn't kill Bitcoin makes it stronger. And I think that's exactly what had happened. That you had this very philosophically divided community where one part wanted to go with core and the other part wanted to go with the Bitcoin Cash bigger blocks guys. And I think it was very healthy for the ecosystem that instead of spending more time fighting each other, well, you guys can take some Bitcoin code and make your own modifications and create your own chain. And if the market supports that, well, there's your answer. And I think I like to see that. A lot of people get concerned with the short-term price action and, is there going to be a lot of FUD before the fork, or is this going to, cause prices to dip or whatnot? Well, traditionally, the times leading up to forks tend to be, from what I've seen, a pretty good buying opportunity as the fear and the doubt tends to freak the weak hands out and they sell. And then, like we saw right before Bitcoin Cash, I mean, the market just bounced right back after the fork happened. I think these things are healthy for Bitcoin. I'm not very interested in many of the forks. I thought Bitcoin Gold was going to be a flash in the pan, and that seems to be what has happened. And time will tell with 2x. It looks like with Bitcoin Cash, there was a very clear-cut divide where they were happy to sort of take their ball and go play a different game. And with 2x, it doesn't seem to be the same way. This seems to be a fight for the name behind Bitcoin. And obviously, there's a lot of value in having the name and the reputation and the BTC ticker. From what I've seen, there's a lot more ground root support for what we could call BT1 or Bitcoin Core or Bitcoin as it exists today. I think that 2x is probably going to be something similar to what we saw with Bitcoin Cash, where people made a very big deal out of it, and then it's kind of faded into the background. And there's a lot of very smart, very dedicated people working in Bitcoin Core. And I don't, like I said, I don't have an emotional stake in this game. And one of the things I see in the space, and I think we're probably going to get to this discussion soon, of how many different assets there are and how many different groups of people are supporting these various projects, and people get very emotionally attached to their project. And just like people get attached to their football team or their religion or their hometown, because humans are tribal creatures. And I think what you're seeing is a lot of people that get emotionally attached to these things and then try to, beat the other team, so to speak. And what I try to do is dig through all these emotional arguments in favor of, well, who has the best technology and what does the market really want to see happen in the world, and who's, providing the most groundbreaking advancements. And then again, I'm going to watch the market and see what happens unfold. So my prediction is that, like very many forks before this, I'm guessing that there will be some short-term volatility, but I think Bitcoin will come out of this stronger and probably more valuable than ever before. That seems to be the history of Bitcoin hard forks, at least at this point.
Right. Yeah, Bitcoin continues to prove itself resilient, and it's quite powerful. Okay, so let's start talking about the amazing things that we're seeing in the blockchain space. Cryptocurrencies are solving incredible problems. And I interviewed Eric Voorhees a couple weeks ago, and he doesn't even like using that word anymore. He likes to call them digital assets because he sees them more as just cryptocurrencies, just for money. And I thought that was interesting because, of course, we're seeing cryptocurrencies serve as a tool for money, data storage, cybersecurity, title and registration solution, incentivizing content creation, and more. And I think especially in the beginning, it's very easy to confuse a lot of these altcoins as just some Bitcoin copycat. And I remember the moment when I realized that within cryptocurrencies, there's essentially different sectors. And obviously, this is all developing very fast. And I guess by way of just to kick this conversation off, how big of a deal is blockchain as a more general application for the future in just sectors across the board?
Another great question. And first of all, I watched or listened to that podcast with Voorhees, and I think he's a brilliant guy. And I would encourage anyone listening now, if you're interested in this space and the topics we're discussing, go back and watch Kenneth's interview with Eric. A lot of great stuff there as well. And I would agree with him. I think that at this point, the word cryptocurrency itself is an anachronism, because while Bitcoin was created to be a peer-to-peer digital cash system, the vast majority of, I like to use the word crypto asset. I stole that from Chris Berniski, and I've actually been reading his book that just came out called Crypto Assets. It's a fantastic guide to anybody looking to invest in the space. Yeah, I would agree that you do have some similar assets. Litecoin is a very good example, that it's basically a copy paste of Bitcoin with some minor modifications. But the vast majority of assets in the space really aren't currencies. So crypto assets or digital assets, I think, is much better nomenclature. And it's funny because after I met my partner, Frank, and we were talking about starting up this fund, and we were trying to figure out an investment strategy, we took a look through, well, there's now thousands of these assets, because it's relatively simple to cobble together some computer code and start your own token. And most are worthless, and most are going to fail, and most are scams and pump and dumps and Ponzi schemes. And, part of the value we provide as a fund is to help navigate this environment. But there are some really amazing things going on. I think the best way to probably describe how this is happening is to give a couple of concrete examples. So Bitcoin basically enabled a peer-to-peer digital cash system that eliminated financial middlemen. And a lot of people, I don't think, really realize this. They think Bitcoin is just a different kind of PayPal, or it's just a faster, digital money. And we already have digital money. If you have a bank account and you access it on your phone and you send some money to somebody else, that's digital cash. But that's not Bitcoin. One of the many great things about Bitcoin is that it's peer-to-peer. So you no longer have to use a third party to send value to somebody else. You can just send it directly to that person, and you no longer have a bank or a processor or a credit card company taking a cut of that. And so the second largest crypto asset by network value at this moment is an asset called Ethereum. And Ethereum uses the blockchain ledger, a way of keeping track of who has how much value in the system and the ability to send money or send value on a peer-to-peer basis. But they took the concept behind Bitcoin, the programming language, and they broadened it so that instead of doing just payments, you could really write any type of code you wanted to do. And they talk about this using the nomenclature smart contract. And it's pretty much exactly what it sounds like. If you have a paper contract that two people sign and agree to, it's a way of organizing action between two or more parties. You and I both agree that we're going to perform certain actions at certain times under certain conditions. And then, we sign it, and we both hope that we end up keeping up both ends of the bargain. But what happens if I decide, say, to sell you my car, and then I give you the keys, and I expect you to make monthly payments, and then you never send the money? Well, I probably have to go bring in a third party. I have to take you to small claims court, or hire a lawyer or a debt collector, or I have to get some type of third party there to enforce that trust. And what Ethereum does is it takes that contract and it turns all of those stipulations, it turns the agreement into computer code, an if-then statement. If this happens, then do that. And when both parties agree to that smart contract and they sign with their digital signatures and submit that code to the network executes the code automatically. And by eliminating the need to have a third party enforce these contracts, the value that would otherwise be sucked out of that arrangement by this third party is kept between the people that are doing business with each other. And so there's a real value in eliminating these third parties and allowing people to send value and to do business peer-to-peer. And we're just starting to see some of the implications of that, because what Ethereum is allowed to happen is for all these other teams, tech startups basically, that instead of going to Silicon Valley and begging VCs for capital, instead of going the traditional route through Wall Street, teams can simply build a project on top of Ethereum, just like you could create a website based on the infrastructure that underlies the internet, like the TCP IP protocol. And these teams are now making all these different projects based on these smart contracts that, like you mentioned, everything from prediction markets. Like I used to bet on Donald Trump on Predicted and predict it as the third party who would basically match someone like me that wanted to bet for Trump with somebody else that was betting against Trump. And for bringing these people together, they would take a large chunk of our profits. Well, there are projects like Augur or Gnosis that are trying to create a decentralized version of that, where that value, instead of going to a third party, would be kept within the network participants. And if you can creatively structure the correct incentive system, you can have these self-sustaining ecosystems that perform all the functions that many of the third-party companies or corporations are doing today. But instead of having them suck away a large part of that value, it's kept within the participants themselves, and in fact helps to incentivize them to participate and strengthen the network accordingly. And it's a very much a positive feedback loop. And I think that's what we're seeing as people realize how much can actually be done in the space. And it's very exciting to see what people are coming up with.
One of the things that you were telling me about before we started this call here was that if you were to take the top 100 cryptocurrencies, and you divided them up, I know you and your partner were doing this, especially dealing with the hedge fund, you'd have basically 32 different baskets of different sectors. So what are some of these different baskets that you're dividing these different digital assets into?
Another great question, and there's so much overlap between so many of these things that it's been very difficult to categorize them. I think Chris Berniski, the author of this crypto assets book I mentioned earlier, did a very good job in essentially breaking it down into three sections. You've got your straight cryptocurrencies, which are stores of values, units of account, medium of exchange, where that's really all they do is try to serve as a store of value or a currency that can be spent. And so some examples there are of course, Bitcoin, Litecoin, the forks like Bitcoin Cash. You've got another area called, let's call it crypto commodities. And just like you have commodities in the real world for, oil and soybeans and things of that nature, well, now that we live in a digital world, in a digital ecosystem, we're starting to see the emergence of digital commodities. And there's demand for computing power and bandwidth and storage. So you've got projects like Golem or Storage or Filecoin that are working on providing platforms by which those commodities can be bought and sold. And then you still have an entire other group, call them, maybe crypto securities, tokens that essentially represent ownership in a platform or a protocol where ideally value accrues to those tokens the more that platform or product or service is being used. And you've got everything from gambling to gaming and virtual reality, lending, finance, lines of credit, advertising, conditional payment platforms, data immutability and asset tracking, auditing, decentralized exchanges, social media networks, ways to create your own custom token, insurance markets, and there's more coming out every day. There's a new ICO and there's a new project coming out. And one of my favorite analogies to this space is in Alice in Wonderland. There's a character called the Red Queen, and she's running as fast as she can, but because the environment moves with her, she never gets anywhere. And that's almost how you feel trying to keep up in the space where I'm spending 8 or 10 hours a day reading books and blogs and forums and message boards and Twitters and white papers. And the faster I run, it just seems like everything's moving just as quickly as I am. And it's very difficult to keep up here, especially given that, these markets trade 24/7, 365. The bell doesn't ring at 4:30. You don't get weekends off. But my God, is it exciting to be on the cutting edge of technology and financial innovation, and, to be part of a movement like this that it really feels like the internet in 1996, right after the web browser first gave the vast majority of people access to this space. And at the time, you could see a little bit into the future of the internet. Internet search was a good example. You very quickly realized that the ability to type in a query, whether it was in Alta Vista or Ask Jeeves or Yahoo or eventually Google, you get an answer back. Well, you knew that was going to be a big deal, and you could see where that was going. But in 1996 or in the late 90s, you just couldn't imagine the type of technologies that were going to come from the internet, the Facebooks and the Ubers and the Airbnbs and the Spotifys and the types of things that would be enabled. The revolutions around the world, the enabling of free anonymous speech, and how that would affect the way we live, and how social media would change the way we organize ourselves in communities and live and work and find partners. And I think the same thing is happening with the crypto space. You can see a little bit where it's going, better remittances, faster payments, eliminating third parties, decentralizing certain aspects of fragile systems that turn them into anti-fragile systems. But the exciting thing is that there's so many unknown unknowns. You can't even imagine where we might be 5 or 10 years from now if the rate of technological change continues at this pace. And more smart people, like yourself, are coming into this field every day. And the reason I've now dedicated my career to this is because I have yet to introduce somebody to this space or to Bitcoin or to the concepts of crypto and not watch them just light up with excitement and go, wow, that is incredible. Every smart person I know immediately gets into this and becomes obsessed. And that's a very exciting thing to see.
That I couldn't agree with you more. Jonathan, so I'm very curious to see, I guess, some of the behind the scenes of what you're dealing with now. as we are in this unprecedented territory. And I can tell you, we've seen some pushback when it comes to governments and regulators and banks who are not necessarily for this decentralized system of money, transfer of value that's out of their control. And so it's interesting because you're obviously trying to start a hedge fund, a cryptocurrency hedge fund. And I'm wondering if you're having any sort of resistance from any entities, and what do you think the future is going to be like with the dynamics of cryptocurrencies and, you know, the regulators, the governmental entities?
That is one of the most pressing questions in the space right now, certainly. One of the more fascinating aspects of this space is that, you know, Bitcoin got its start coming out of the cypherpunk movement, and it was this very niche collection of, you know, very hardcore libertarian leaning ideologues who, you know, were very much, you know, into disrupting these systems. And I think that it's no coincidence that, you know, the Bitcoin white paper was released as the global financial crisis was unfolding, and you really got to see why there was a need for these types of technologies. And so, having been born out of that sentiment, watching Wall Street and big money and institutions start to dip their toes in and become interested, and I think there is going to be something of a clash. And there's certainly, you know, like we saw where Bitcoin really jumped onto the scene with the Silk Road, which was this, you know, basically completely open market with no regulations, where you could buy and sell everything from stolen credit card numbers to heroin to, you know, God knows what else was on there. So coming from there, you know, that there's going to be a little friction. And I think that what's really going to be interesting right now is a lot of people don't realize Bitcoin's not anonymous. It's pseudonymous. You don't have an account with your name on it. It's a random string of letters and numbers, but that you can see all the transactions between accounts. And so given enough information, you can essentially start tracking movements back and forth. And because of that, teams have come up with other truly anonymous cryptocurrencies, things like Monero or Zcash or Particle is sort of a dark horse that's one of my favorites right now that can't be tracked. And so I think we're seeing a lot of growth, and certainly a lot of the traders that I'm talking to have started to hedge into these private cryptocurrencies because they think that's part of where the future is going. But, well, as we've seen before, this is not a space that can be controlled. And when people ask, well, what happens if the U.S. bans Bitcoin or something like that? And I say, well, what would happen if the U.S. tried to ban the internet? It can't be done. You know, yeah, there's catastrophic world-ending scenarios, you know, where we don't have electricity and we go back to living in the dark ages. But if that happens, we've got bigger trouble than trying to figure out how to send Bitcoin back and forth. But that's what I tell people. Well, you know, you can't stop Bitcoin, just like you can't stop the internet. And I think that there's going to be a lot of drama in this space as corporations and Wall Street try to get involved and deal with playing in a sandbox that refuses to be controlled and corporatized and regulated. So personally, I think that the market would appreciate some regulation in the sense that markets like resolving uncertainty. And everybody, I think right now, is kind of looking around and holding their breath and waiting for the inevitable release from the SEC or the IRS on exactly how they plan to regulate the space. So in that sense, I think a little regulation would be welcome. But on the other hand, you know, the part of me that got excited about creating a system that a government can't ruin, like they've ruined our fiat currency, you know, I'm looking forward. I've got my big bucket full of popcorn, and, you know, regardless of what the price does, at least I know I'm not going to be bored for a very long time.
The understatement of the year, right? Jonathan, so okay, so we're at the 30-minute mark, a little over that, but I want to give you an opportunity here to talk about the hedge fund. Maybe tell everyone, you know, for people who aren't even familiar with what a hedge fund is, let them know what a hedge fund is, and what is unique about your cryptocurrency hedge fund and where you guys are along your route to being operational.
Sure, I appreciate that. So the name of the fund is Numeris Capital. There's a Latin phrase, vires in numeris, which translates to strength in numbers. And seeing as it's numbers in cryptography, which gives these assets their value, I figured Numeris Capital was fitting, and the domain name was available. So if you want to visit our website to learn more, it is numeris.capital. The fund's not open to the public, but if anybody's interested and would like to ask questions, feel free to shoot me an email. Obviously, I could talk about this all day. The reason we started the fund was pretty simple. Like I said, I had met my partner back in March, and we're both obsessed with this space, and it's so difficult to invest here. Like I said, we're kind of where the internet was in 1996. Some people might even put it a bit earlier, where you still kind of have to be a tech geek to even be able to get into this. And there's companies like Coinbase, which have created great user interfaces and make it a lot simpler, maybe to buy the Bitcoins and the Ethereums of the world, but there's still so many dangers and pitfalls. So what we try to do is provide a way for people to invest larger sums of money into this space to where they can write us a check, and we do all the work of keeping up with the markets and trading and investing and protecting their capital. I tell people that, you shouldn't invest more into this space than you can afford to lose. Bitcoin is the oldest of these assets, and it's not even a decade old. Most of these are months or only years old, and it's absolutely possible that they could lose 80% or more of their value in a minute or an hour at any time. So, but at the same time, it's very difficult in a globally connected world to truly diversify your portfolio. And I forget the name of the blog which put this out, but there was a great study where a data scientist wanted to basically see if he could combine additional investments or a basket of securities that would approximate the price performance of Bitcoin so that he could receive those sorts of gains without actually having the underlying risk and volatility of holding Bitcoin. So he wrote an algorithm, and he took 3,000 something assets, everything from gold and oil to corn and soybeans to tech stocks, and he compared their correlation with Bitcoin. And what he found is that there wasn't any asset that had greater than, I think, maybe a 0.2 correlation with Bitcoin, which is pretty much no correlation at all. Bitcoin tends to act as a hedge against global uncertainty and chaos. It spiked after Brexit. It spiked after Trump won. It has a history of sort of zigging when the market zags. And so I tell people, depending on, and I'm not a financial advisor, this is not financial advice, but depending on your age and your situation in life and your financial goals for the future, I would, recommend 1% of your portfolio in Bitcoin in a basket of crypto. And for those who agree with the philosophy put forth by this space and maybe have a higher level of risk tolerance, we're here to manage the difficulties that are inherent in this space. We're not simply people that pick assets like you would pick stocks. You have to learn how to navigate the infrastructure, first of all. So just being able to sign up for these exchanges and figure out how to buy and sell these tokens and work all these, very computer nerd-esque user interfaces to avoid the scams and the pump and dumps and the Ponzi schemes, to avoid getting caught in exchange collapses and all sorts of infrastructure issues. You don't want to accidentally send your Bitcoin to an Ethereum address and lose all your money instantly, for example. And then, of course, like I said earlier, these are 24/7, 365 markets where 1 month in crypto is like a year in the stock market, and it just moves at lightning speed. So for people, especially those that are older, I'm working with a lot of our older fraternity alumni who, they're seeing Bitcoin and Ethereum and crypto on the front pages of the Wall Street journals and the Economists and, the CNBCs of the world. And they're going, man, I want to get into this, but, I have a degree in information systems, and my partner Frank is an electrical engineer and works as a computer programmer. And we still often have trouble fully comprehending everything that's going on in the space and keeping up with it. And there are a lot of people out there who want to be a part of this, but just don't have the time to devote to it like we do. And it certainly helps if you're obsessed like we are, because for us, this doesn't feel like work. It feels like fun. We do it because we love it. And yeah, the money's nice, but at this point, I don't have to worry about money. So I'm doing this because I want to see the space grow and prosper, and I want to help people get involved and to protect them from the dangers. One of the examples I listed earlier was, there are ideas in this space. The idea of an immutable, uncensorable, unseizable store of value, the idea of a smart contract where you can cut out the middlemen and have a trustless network, the idea of a truly free market with no financial or commercial intermediaries sucking away value. Those ideas are not going away. But just like we saw internet search go from Alta Vista to Ask Jeeves to Yahoo to Google, and just like we saw social media go from LiveJournal to Zynga to MySpace to Facebook, there's in my mind, a very strong possibility that these ideas will change vehicles probably multiple times before they end up in maybe not a permanent iteration, but maybe a more long-lasting example. So it's difficult for me to tell people that either don't have the capital to invest in our fund or the time to stay up with the space. They say, well, if I just buy Bitcoin and hold on to it for 10 years, I'll be okay, right? And well, right now in 2017, I would think yes. But if you had bought, if you had bought into MySpace and then thought, oh, I'll just hold on to MySpace for a decade, well, you wouldn't have done so well. And that's part of the service that we provide, is to help make sure that as this space evolves, that we evolve along with it. And we have no emotional attachment to these assets. We have emotional attachment to the ideas behind them, and we follow those ideas. And whoever can do the best job of bringing those ideas into the world, well, that's where we want to be invested, and that's where we want to be a part of. And so that's just an example of the various services that we're attempting to provide with Numeris.
Wow. Well, hey, you're a testament to the fact that the smartest people in the world are in the fintech space and specifically involved with cryptocurrencies. And it's really exciting. And, we'll definitely have you on the show in the future for follow-up interviews, especially as things develop with Numeris Capital. So, Jonathan, thanks for coming on Crush the Street with me today.
Well, it's been my pleasure, Kenneth, and thank you for having me here and for doing your part to help spread awareness of all the amazing things that are going on. I know I speak for a lot of people and a lot of listeners who have enjoyed all your other podcasts. Keep up the great work. We're definitely looking forward to everything else you have to put out.
Hey, man, thanks so much. Appreciate it.